Mokes. Today we are going to be talking about Costco earnings and their Q4, even though it's Q3 for the rest of us, right? Just their accounting. We're going to talk about whether or not their earnings were up to par, whether they missed the mark or not. Fair disclosure, I own some Costco stock. So this was also for me, myself, as a share owner in my long term accounts. I even think I have some in my wife's account as well, and our IRAs, our self directed IRAs. So for me and all the companies that I own, when earnings come out, I do a deep dive to figure out, do I still want to own this company? How are the fundamentals looking? Typically, when we're talking about technicals of stocks and stock prices and whatnot. But it's always good from a long-term standpoint when we're investing to look at the fundamentals of a particular company, right? So my disclaimer for those out on YouTube and in the Zoom, this is not financial advice. This is for informational purposes only. Trading and investing are risky. Do so at your own peril and in conjunction with your financial advisors, and also do your own research as always. That's the purpose of this. Is so that ideally you have enough information to make your own decisions about the market. You might go, I'm crazy, but if you have enough information to determine that I'm crazy, then you're going to feel better about your investment and trading decisions, right? So let's start. Number one, Costco earnings. So they beat expectations on the earnings per share, but the revenue was a little lower than expected, right? So this is kind of what we call mixed results, right? They were slightly higher on the earnings per share expectation, which means that they probably ran their business better and got their costs down. But in terms of revenue, their revenue grew, but it didn't grow as much as everyone was expecting. So they were expecting $80 billion this quarter, which is crazy when you just think of how much money the Costco's and the Walmarts take in. And oh my God, they reported 79.7 billion only, you know. So still really good revenue numbers, but they're not growing, at least this last quarter, as fast as people anticipated. What I do like though is that recently they had a price increase for their membership. So we might be able to start seeing some more revenue come in from the price increases from their recent membership increase rates, right? So let's go look directly into their earnings for this quarter. And I always like to give people some insight into how I find this stuff. If you want to find the earnings of a publicly traded company, Google the company's name or ticker symbol and investor relations, right? So if I Google Costco investor relations, it's going to take me to a page where I can go download press statements, financial statements, SEC filings, all of those things. And then I'm typically going to be looking for either the press release with the profit and loss statement, or there's an 8K a lot of times. That's what it's called, to download, or they have it in HTML format. They have it in Excel spreadsheet format. Specifically Costco, they had it in 4 separate formats where you can download it, whatever's easiest for you. Usually I'm going to either pick HTML or PDF because I just want to look at it really quickly and I can always just take a screenshot or download it, right? So if we're looking at their revenue for this quarter, right now for the 16 weeks ending September 1st, 2024, their Q4, based upon their financial statements, net sales were at 78 billion, 78.2-ish billion. Membership fees were at 1.51 billion. And that's up from the last quarter of last year, which was 77.4 billion and 1.5 billion in membership fees, right? So their total revenue was 79.7 billion approximately, which is up from 78.9 billion of Q4 of 2023, right? And if we're looking yearly, just to see the growth in the company, right? Last year at this time, they were at 242.2 billion for the end of the year of their Q4, and now they're at 254.4 billion. So what I'm looking at these numbers for, I want to see is their growth, right? And right, and specifically for long-term investing, because I own shares of Costco, like, is there still growth in the company? And I'm seeing that versus quarter by quarter. Like, you're seeing growth quarter by quarter, but from an annual growth perspective, to go from 242 billion and 254 billion, that tells me, hey, they're still growing by what? 5%, 10%. Costco somehow, this massive behemoth, is still growing its revenue, right? So for me, I think that looks good for the future, right? There might be some short-term dips if you're swing trading this, but does Costco look like a good company for the future? I think so. Um, Operating expenses didn't go up that much, probably around the same amount that its revenue went up, right? And their net income, if the net income is like profit, right? Or EBITDA, if you ever hear that, earnings before interest, taxes, depreciation, and amortization, right? So how much are they actually profiting from that? So even though they're taking in 79 billion, their profit is 2.35 billion, right? But that's up from the last quarter of last year, and annually that is also up, right? From 6.2 billion last year to 7.3 billion in profit this year. One of the reasons why Costco's profits are like not higher and its margins are lower, it's because that's one of their policies, is to keep their margins under 14% for all of their items, because they want to be the low cost leader, similar to an Amazon and a Walmart strategy. They don't want to raise their margins. They could charge more people at Costco more, but that's the reason why people go to Costco, is because you're going to buy in bulk, but you're going to get a big discount for buying in bulk. So they specifically make sure that their margins aren't more than 14% or more on any items. A good podcast where they go into depth on this is Acquired. I think I've mentioned it a couple of times, but they specifically have a Costco episode. And this is a podcast where they really talk about the history of a company and like their business models in depth. Like, the podcast could be like 2 hours long, but they really go into detail on Costco. And that's one of their major things is, while most people are trying to increase their margins, they artificially keep their margins low. And that's how they keep acquiring customers, right? So another important sheet in the financial statements is going to be the balance sheet. And really, what I'm looking for from a long term standpoint is, are the assets they have on hand greater than their debts or their liabilities, right? And then, like, what's the ratio, right? What you don't want to see is that this number here, total liabilities, you don't want to see that this number is greater than total assets. That kind of tells you that a company is upside down. So if they have a bad month, they're going to have to borrow more money. They're going to have an issue paying their debts. If we're in a financial downturn, if we go into a recession, are they going to be able to last, right? So here, Costco's debts are 46.2 million, right? And if you're just looking at all of these things, you can figure out, like, accounts payable is number one, is probably for all the items that they buy, I would assume, or maybe there's some long-term debts or loans or whatnot, right? I haven't. Oh, actually, no. Long-term debt is really low. But accounts payable, I would assume, is related to all of their vendors, right? Just standard things. And then if you just look at all of these other liabilities, other long-term debt, operating lease liabilities, other things that they're categorizing in there, it's not really crazy in consideration with, like, how much cash they have and how much they have in assets and property and equipment, etc. Right? So they have $69.8 billion in total assets on hand as of the end of this quarter, and they have 46.2 billion in liabilities. So for me, they have 23 billion more assets than in liabilities. So this looks like a relatively stable company. And we know Costco isn't going anywhere anytime soon. So, from a long term investment standpoint, I still want to hold this, right? Um, this is just for me personally. And then just some more highlights, right? Their membership income is up 6.5% uh, in terms of the growth. Their renewal rate worldwide is crazy, right? So 90% of their customers on their annual plan renew. And then in the US and Canada, 92.9% renew, right? So they're not experiencing a heavy amount of churn in their business. Most people who are Costco members stay Costco members for a long time. I'm certain I've been a Costco member for at least 5 to 10 years. I know my wife has been a Costco member for probably 10 to 20 years now. So most people that go to Costco, especially if you have a large family, you're not going anywhere anytime soon. Um, you're seeing an experience of 7.3% in paid membership growth, uh, etc. Right? Um, this is where I think Costco could grow more, but they're not really focused. Like they focus more on their warehouses, but you see their e-commerce sales are up almost 20%. Right? And what's crazy is they're selling appliances, gold, home furnishing, and gift cards. Those are their top sales. Go figure, right? I wouldn't have guessed that you'd be buying a washer and dryer or a refrigerator from Costco online, but apparently people do. Or gold. I didn't even know they sold gold and silver bullion. Costco's weird, but apparently they know what they're doing because those are the top sales categories, right? And then I thought post COVID, like home furnishings would kind of go down, that everybody kind of remodeled and did their thing in COVID, but apparently home furnishings are still up. And then gift cards, like I said, go figure. Um, but for me, I feel like if they focused on this, they could probably take some market share away from Amazon and Walmart. But Costco doesn't really focus on its digital sales, but yet somehow it's still growing at 20%. So this is where I think there's a huge avenue or area of growth for Costco if they decided. They already have the warehouses. It would really just be either delivery staff or integrating with some sort of carrier to get your stuff to you. But they already have the warehouses. It would be easy to just have an employee start packing stuff, if you ask me, to add another vertical to what they're already doing. Right.
I feel like they're low key already doing that too, though.
Yeah,
I've ordered
no,
one.
I do too, but I feel like they don't advertise it like Walmart and Amazon. You feel me? Like it's like something you have to discover rather than something like they're like shouting from the rooftops. So that's all I'm saying. I don't feel like they're really focusing as much on it as Walmart. Like Walmart has, like, over the last few years realized that Amazon is a huge competitor and has gotten its act together as it relates to its e-commerce and delivery, right? It used to be stores, brick and mortar only, but they've decided, hey, we're gonna start like trying to add this Amazon component onto our business, and it's been relatively successful. They even have their own like ecosystem now. Costco, I feel like, is mad late to the party, right? E-commerce has been around for 20 years now, and Costco is finally getting its act together to be like, you know what? We will start shipping things to people, or we will start delivering things to people. And you saw the categories that it was delivering. It's not even like the grocery stuff that like Amazon and Instacart and whatnot are like killing over. They got groceries too, you know? So it's the appliances, gold, and home furnishings rather than like the stuff that Amazon and Walmart are selling like crazy. The good thing about Costco too is that they make a lot of their suppliers and vendors make SKUs just for Costco. So Costco might have a 7 pack of toilet paper or paper towels, and while you can get individual rolls or 4 pack somewhere else, you can only get the 7 pack at Costco, right? I don't know if you've noticed that, but you'll see that that's how they do. Like even with like let's say like the little sanitation wipes to wipe down counters and stuff, they might have a 3 pack, but if you go to Target, there's only a 1 pack or a 2 pack, right? So they have like their individual SKUs that are just for Costco. So I feel like they would do really well online because you'd be able to kind of buy things in bulk where you can't even get that similar skew anywhere else, you know. So that's just my 2 cents. And if you look here at gross margin, this is what I was talking about. It's at 11%. Costco could raise prices, but they never do. They always try to keep this number below 14%. It's like a company policy, right? So this is by design. They know if they keep their gross margins at 11% or under 14%, that their prices and are going to be lower than everyone else's, even Amazon's and Walmart's to a certain extent. And but they make you buy 10 of something or 20 of something, but you get a really good deal for buying 10 of something or 20 of something, right? So that's their business model. And you see their net income, their profit, not their revenue, has experienced a 9% growth. Earnings per share experienced close to 9% growth too, right? So Costco is as steady as she goes, if you ask me. It's kind of like Walmart. That's why I told you I liked when we were talking about this a couple of months ago. I wanted Costco if it dipped, or I wanted Walmart if it dipped. Walmart didn't dip, Costco did, so I bought Costco. You know, but I like both of these companies in that space more so than Target or any of the others in the space. Like 1A and 1B for me are Costco and Walmart. Specifically in the brick and mortar retail space. Right. Future outlook. So let me tell you what I did. In addition to getting the actual numbers from the website, I also understand that 30 minutes after earnings are released, typically they usually do a web call or some sort of conference call to shareholders. And instead of listening to that 30-minute or hour-long call, there are places, I think I found it on maybe the Motley Fool, where they actually just print out the transcript. I'll print out the transcript of the call, feed it to ChatGPT, and figure out what the future guidance of the company looks like. So here's what ChatGPT told me specifically as it relates to like the future guidance. Costco doesn't do future guidance where it gives targets. It rarely ever does that. That's what I learned based upon asking ChatGPT that question. So you're gonna see analysts that give its expectations for next quarter, but Costco rarely ever like announces what its expectations are for the next quarter or the next year. It's usually relatively broad, um, but essentially they see minimum near term impact from the recent membership fee increase because of accounting issues. So they're expecting most of that revenue to come in at the second half of 2025, which means that like the first half of 2025 might be a little light, but they're probably going to see a boost in their numbers from an accounting standpoint in the second half. And they're continuing to invest in their technology and their employees and the member value, right? Which is like in the form of lower margins, right? So they're trying to digitally expand, kind of what we were just talking about with the e-commerce. They're probably seeing the same numbers that we are if they saw 20% growth on that side. And but particularly in logistics for big and bulky items, probably appliances, right? Their expansion of their Kirk signature brand, which is the best-selling brand in like the world, is their knockoff Kirkland signature. It's a knockoff in terms of name, but the quality of the product is really good, which is why I sell so much. And then navigating supply chain issues, like if you've been hearing about strikes in Canada and there could be potentially looming port strikes in other places and freight costs, right? Trying to figure that part out. So these are the areas that they're focusing on for the next year. Let me take you out of this really quickly. Let's go to Think or Swim. Can you guys see my screen? Hello? Can you see my screen? I'm going to assume you can. Um, okay, so we just want to see the reaction, right? So just looking at the day chart without zooming in, Costco dipped, but it definitely didn't dip that far. And usually I like to see 1 or 2 days of reaction to figure out what the real reaction is, right? But it dipped, but you can't say it tanked, right? If you're just looking at Costco, it came down here and then they bought it back up. And I would just say it's because, number one, Costco is one of these kind of steady stocks. It doesn't go up or down too much, like ever, really. It's kind of like, look at the chart. Like, it's steady. It has its corrections or its dips when it comes back, but it's usually pretty steady. Costco is not something like a Tesla that has a lot of volatility baked in. It's kind of like Walmart, right? Let's look at Walmart. That's why I said the same thing. Walmart said Walmart's been going crazy lately, but Walmart's pretty steady, right? It doesn't have a bunch of volatility. It tends to go up slowly. So this is why I kind of have it in my portfolio as like something safe. I know I'm in Costco all the time, or we're ordering from Costco all the time. So like something I don't think is going anywhere anytime soon. I love their customer base. This is from the Acquire podcast. What I've learned about Costco's customer base is that Walmart typically has a lower earning customer, but the average Costco customer makes over $100,000 a year, right? So their customer base, I feel like, is more resilient as well. And what's crazy is like people that make more money are more interested in saving. Crazy dynamic, but that's the case. Like Costco members save more, but they actually make more money from their jobs or businesses or careers, right? So I just love their customer base versus a Walmart's, where if we do enter a recession, Costco's customer is going to be more resilient than and have a larger savings than a Walmart or a Target customer typically, right? Walmart's going to have low prices and brick and mortar, and you don't have to pay memberships. So they're still going to do well in a recession too. But I think Costco's base is more resilient and they're more loyal, extremely loyal customers. Like you said, they only have a less than a 10% churn internationally and less than that in the US, right? So, but just to see how they reacted to the numbers, they didn't like that it missed on the revenue expectations, but it didn't tank like Intel did on its earnings, right? Just to show you a comparison. This is what Intel did on its earnings. That tanked, right? Versus Costco, went down a little bit. And just to show you where did I enter Costco? My trade price was at 830. So just looking, this is why I analyze earnings, because I told you I own Costco, and I think I bought Costco around here. Yeah, when it got to that 50-day moving average, because that's usually when I like to buy stocks. It checked back. I think I bought Costco on one of these candles, probably on this candle or this candle on this day back in July, right? And I bought it at 830, and right now the price is at 885, so I'm up $50 on every share. I'm still good. I'm not nowhere near thinking about selling Costco, right? I think I got it at a decent pullback here, and when we maybe I bought it in August because I know we were pulling back in August too. So I know I got it somewhere in here, and it dipped up. It came up from there, and this is looking pretty promising that it fell and then has this wick right there from a technical standpoint, meaning that as soon as it got down here to that 50-day moving average, people bought it back up immediately, right? And that was my strategy here, was to buy it around the 50-day moving average when I got in, because apparently Costco rarely ever dips to his 200. It hasn't been to his 200 since October of 2023, right? It seems to bounce off of that 50 consistently, which is why that's where I was looking to pick it up, just to show you my insight of where I bought Costco and why. And then I bought 6 shares because Costco's pretty expensive. It's almost $1,000 at $830, and then I also bought some, I think, in my wife's retirement too. Another 6 shares at $830, right? So still up on Costco. I still want to hold this for 5 to 10 years. But that's essentially my evaluation of its earnings, right? That's how I do my fundamental analysis. I'm not just going to go look at the reaction. I'm not just going to go look at the stock price. I'm going to dig into the earnings of a company, especially if I haven't purchased that company yet, to figure out how do I think this stock looks in the long term. Are they announcing anything that could be a serious threat for me to be watching for in the next few months? What does their cash flow look like? What's their asset debt ratio? Are they underwater there? What does their growth look like? Do you see an area where they can expand and get bigger and grow that, what, $80 billion they're making a quarter? Could that become 85 billion, 90 billion in the future, which means that the stock is likely to keep going up? If so, you will want to be a buyer of Costco, right? And so if you're not in the stock yet, you would do what I just showed you on the chart. Where do you want to get in? What pullback, at what level do you want to get in? My level when I bought was the 50-day moving average, because I looked over the last year and it never got to the 200. Typically, my long-term investment strategy is to try and buy things that are bullish long term or trending long term that get down to their 200. But Costco hasn't gotten there in a year and a half. So for me, just looking at the chart from a technical standpoint, that 50-day moving average is where I would try to get into Costco if the market is still bullish and still trending upward. So that price is where we hit on Friday. Would have been around $875. Would have been a great place to enter Costco, from its high, its all-time high of $923. A decent pullback would have been back to that 50-day moving average. Will it come back down over the next few days? Don't know. Typically, a stock is the most volatile during its earnings period, and then like the couple of days after for it to settle out in terms of what it's really going to do, right? But from my position, I bought around here, right? Stock looks good still, right? I'm well above even, and Costco still looks pretty decent, right? But if you wanted to get in, that 50-day moving average, it seems to be a good place from the chart to get in, either to swing this or to start building a long-term position. All right, let's go back. All right, next thing. So, last week, and this is not weekly news from this week, but from last week, this is my slide from last week. We were talking about the two things that I was looking at were Micron earnings and Costco earnings. A lot of people don't know anything about Micron, but it's in the semiconductor sector, and it pretty much produces memory chips, right, in the semiconductor sector. The reason why I was watching this is because things trade in sympathy with it, right? So if Micron reports terrible earnings, that might affect the entire semiconductor sector. The reason why I'm watching is because in my long-term account, I own two really big semiconductor stocks in NVIDIA and ASML. So I'm looking at the earnings of other companies in the sector to figure out what the sector is going to be doing, right? And what do we see? I don't know if you can see that. Micron and SMH, Micron versus SMH. SMH is the entire sector ETF for semiconductors, and I just wanted to show you how the sector traded in sympathy with its earnings. So Micron reports earnings, right? And you see this big green bar because its earnings report were really what it reported in its guidance, investors really liked, right? So it beat its expectations, and you see this huge green bar on Micron after hours, right, when it reported. But what you also see is you see in SMH, the entire sector, it lifted the entire sector up, right? Because the entire sector became bullish because stock that is weighted in the sector reported great earnings. So investors are thinking, wow, if Micron is reporting earnings that are really good, then NVIDIA, ASML, and a lot of these other semiconductors are probably going to be doing really well as well, So just something to look at, like, because we talk about sectors a lot in this class specifically. You really need to understand what's inside sectors because they do affect, like if Intel tanks, that's going to take SMH down, right? If NVIDIA takes, that's going to take SMH down unless there's some news that benefits AMD or something like that, right? But generally, these things that are heavily weighted in a sector, um, are the whole sector is going to be affected by how they report. So if most of the semiconductor stocks are reporting great earnings, everyone in the sector is going to benefit from that, right? The entire sector is going to be bullish. So that's also something that I look for is something reporting this week that's going to affect a particular sector that I might be trading or a long-term position that I might have. So even though I don't trade Micron frequently, I don't own Micron, I do know that it affects my Nvidia and my ASML positions, and I do trade SMH frequently. So I'm going to be watching it, you know? So that's just kind of like something. I don't want to go too deep into its earnings and its expectations and that sort of thing like I did Costco, but I just wanted to show you like how like a stock reporting in a particular sector might be important to that entire sector and how it reacts. And then we saw the next day that SMH and a lot of the semiconductor stocks took off over the next day or two, and I think that was mostly because of Micron reporting really good earnings. Right. All right, before we get into our weekly stock picks, mostly my swing trades, I'm going to be looking at. Anybody got any questions about the first two areas that we discussed? Yes, no? All right, we are going to move on then. Weekly stock picks, and I tend to go sector by sector, and I'm going from strongest sector or what I believe to be the strongest swing trades. And once again, these are not things to just go out on Monday to buy. My strategy for swing trading is waiting for pullbacks on things that I think are trending strongly in a particular direction. But I don't just go out Monday and buy these things hoping that they keep going up. I'm actually waiting for a red candle day or a negative day on these stocks to pull back that are really strong to take them to the upside. Conversely, if I'm shorting a stock or buying puts or selling call spreads, I'm waiting for really weak stocks to pop. And then on a weak stock that is trending downward, I'm waiting for those to have a green candle day, to have a substantial green candle day to keep shorting those to the downside. That's how I trade things. So if I'm telling you this is my pick, I'm not saying go buy it at an all-time high. I'm saying wait for a substantial pullback, and then that's typically when I'm going to get in, is when it touches a moving average on a daily or a 5-minute chart. Usually it's a daily or an hourly chart for my swing trades. When it touches a daily price movement range, when it touches ATR, those are my particular, or when it's particularly oversold, if you're looking at an indicator such as the RSI or slow stochastics, right? That's what I'm like, an oversold indicator. Those are the things that I'm looking at to get into a stock for the long side for a swing trade. And typically my swing trades are going to last anywhere from a day to 2 to 3 weeks on average, right? That's what I mean by a swing trade. A day trade for me is something I'm going to be in and out of that day. Before the end of the market, I'm going to close, right? So this week, right, if we're looking at the sectors, what's been hot over the last month, the last 30 days, XOY is still there, right? XME, XME is hot. It's starting to trend, so you'll see it lower on my list. Even though it's hot, it's going to be lower on my list because it came from a negative to a positive. If I could show you this pink line, it's hard to follow with all of these lines on the chart. It kind of like caught fire this last week, which is why I don't trust it as much yet versus XLY, which has kind of been more steady over the last couple of weeks. But you got XLY, which is consumer discretionary, XLME, which is metals and mining, XLU, which is utilities, still on the list, XLI is industrials. I don't really trade many things in XLB, but XLB is hot, and it's not usually that liquid. to trade in terms of the options, in terms of the ETF itself. XLC communications, and then you still have gold. GDX is doing worse than actually the futures or GLD, which is why GDX is not on my list, but GLD and GC is. And then just to kind of see what's coming up and what's trending higher, you got tech, right? And semiconductors and tech are starting to trend higher, but they haven't been trending for long, so they're not on my list for this week, but they are for me to watch. Maybe at the end of the week, if they keep going, higher, they might start trending. Then they might pop onto my list at the end of this week. So I'm kind of watching those SMH, XLK, and XLF, the financials. But after the news last week that the Justice Department is investigating Visa for a monopoly abuse and filing lawsuits, that's why XLF for me has kind of dropped down. Maybe with the exception of MasterCard's doing pretty well and AXP. But what was boosting that sector wasn't the banks, it was the credit cards. And then the DOJ just put a clamp on that. So they're off my list for this week. So just looking specifically at XLY, you'll see this week Amazon and Tesla are on it. Why? Because they are actually trending positively now. Last week and the 2 weeks before when we were talking about XLY, it was just McDonald's, XLY itself, McDonald's, Lowe's, and Home Depot. Now we're talking about Amazon and Tesla. And once again, these are in the order of strength for me outside of the sector. The sector is the large vehicle that all of these are in, but specifically in terms of what's strongest in the sector, how I have them rated, like if they all triggered at the same time, I would take McDonald's over Lowe's, Lowe's over Home Depot, Home Depot over Amazon, and Amazon over Tesla for next week, currently in terms of what their charts currently look like. We look at XLY and the sector, look at the trend. And once again, all of the lower period moving averages are on top of the longer period moving averages. I go over this every week. My green line here is my 21 EMA, exponential moving average, my 34 EMA, my 50 EMA, and my 200 EMA. And you'll see the shorter moving averages are on top of the longer moving averages, which means XLY, consumer discretionary, is still trending upwards. So what do I want to do? I want to wait for a significant red candle on this for a pullback before I potentially buy it next week, right? A significant red candle to a daily price movement range. And there's a tool that I use from Simpler Trading that I use for that. An ATR, which is these green and red lines here, right? Or a moving average like a 21 or a 34. That's what I'm waiting for, is a pullback to one of those levels for a particular buy on XLY, which is the entire sector of consumer discretionary. Looking at McDonald's, same thing. You'll see the shorter moving averages on top of the longer moving averages, and it's been trending up for a pretty decent amount of time. So I like the long-term trend on this, the short long-term trend, and I would wait for a significant pullback on this. From a technical standpoint, when we're talking about technical analysis, we're talking about the stock price. This is what you want to see. Higher highs. We have a high here. We have another high. We have another high. Another high and another high. Higher lows. We have a low here. A higher low. A higher low. A higher low. That means that this is trending positively in that direction. The stock is bullish. This is the type of stock that I want to see. But you see the RSI indicator says it might be overbought. So I'm waiting for a pullback, probably back to this level at 60 or wherever you see this low is here. And then that's where I would want to enter for a swing trade. Lows, same thing. Looks very similar to McDonald's, right? Low, higher low, higher low. Well, actually, let's not use that. Higher low or low, higher low here, higher high, higher high, higher high, higher high. Technically, the stock is bullish too, and the sector is bullish. Same thing, Home Depot, right? Just has a little bit more volatility. Low, higher low, higher low, high, higher high, higher high, higher high, right? If it's making new highs, that's what we want to see. Amazon, you see it was chopping, and consolidation. It is on my list now because it finally broke out of that range, which was around like $182. And it finally broke out, started making higher highs, higher high, higher high, higher high. That's why Amazon is on my list. It's not trending though, as well as HD. And you'll see because of these EMAs are more parabolic here, right? On these two or three, on McDonald's, Lowe's, and HD. And this one is more flat, which is why I would prefer taking these three over Amazon, right? And Tesla is looks I and everyone, if you've heard me about Tesla is more volatile. So that's why it's the last on my list, even though it's trending and looks more parabolic like HD and low and whatnot. But you look at the volatility on this, Tesla tends to be more volatile, and you just never know what Elon Musk is going to say tomorrow, if you ask me. So this is why, from a Tesla standpoint, yes, it is trending. Yes, it is trending in a hot sector, and it's the most heavily weighted with Amazon in that sector. So XLY is going to move with Tesla. So it would be better to trade those other stocks on a day when Tesla's up too. But I don't trust Tesla as much because it's more volatile. But same thing, if it pulls back to a decent level and it's the only one triggering, I will take it, if the options are liquid. Next sector, XLU. I'm actually in an XLU trade right now, full disclosure, that I scaled out of half of, and it's currently positive. I'm probably up a couple $100 on that trade right now. I think I grabbed it on this day. That's when I got into XLU. Was on either this day or this day on one of these pullbacks is when I got in. So I'm up. I'm not sure exactly the date, but it was one of these pullback days. It may have been this day back to the ATR. I got in, and I'm still positive on the trade. Once again, look at the moving averages. And XLU, if you look at Koifin, which is a free tool, just to go back. This tool is free. It's called Koifin. Go to koifin.com. They do have an upgrade, but this tool is free where you could go see what the sector performance is like, right? So this is where I got this slide from. So let me go back. If you look at Koifin, XLU has been up 6.66% over the last 30 days. So that's why I'm saying it's trending in the right direction. And I've just been looking at this. I've been in and out of this stock a couple of times. XLU has been pretty steady, especially in September because of seasonality. This is a safety stock. We're still in the last month or two of September. Don't be shocked if we have a huge downturn, especially we're coming up at end of quarter. So you're going to see some sector rotation. Sector rotation is not as important as if you're investing long term because you're on a 5-10 year time frame. But for swing trading, you got to watch out for that. So that's one thing I am watching out for is will people be investing less in safety come this last quarter? Are they going to, because XLU has been doing really well, are you going to see some people start taking profits going into the end of the quarter, the ones that got in way back here, So that's something I am watching for. Same thing you'll see on gold. NEE is heavily weighted in XLU. So Nextera Energy, same thing. It looks pretty good. I will be looking for a swing trade if this pulls back as well. But same thing, I might give it a shorter leash because it's been doing pretty well. And this is more of a safety trade. And coming into the end of the year and into a new quarter, are people going to be rotating out of safety into more risk like tech or semis as we saw those climb? So I might, if this gives me a pullback, I might enter, but I might give it a shorter leash because it's a safety trade. And coming at the end of September, maybe people are going to rotate out of this and into some more risk on type of stocks or ETFs, right? Next, XLI. This is in the Dow, heavily weighted in the Dow in terms of the industrials, right? I got XLI as the main vehicle. GE, and I alerted out to everybody a GE trade that I'm currently in right now that is currently positive. Caterpillar and RTX. I actually like Raytheon right now too because of all of these wars that are popping off in the Middle East right now. I have a feeling RTX is probably going to benefit from that, and a lot of the defense stocks as well, right? Because Israel is bombing Hezbollah right now, just killed this major leader in Beirut in Lebanon, and that's gonna pop off a major war in the Middle East if I had to bet on it. They just killed like half of their leadership and just took out their head leader. Chances are, like, there's going to be a lot of defense spending soon, in addition to the Ukraine conflict that's been happening consistently over the last couple of years. And now you got this Israel war that's happening in Gaza. Now they're about to start fighting a second front in Lebanon. And I wouldn't be shocked if Iran starts entering the mix. So there could be a huge fire in the Middle East, but that impacts these defense companies spending. They're probably going to get some more money. Looking at XLI, look at the shorter period EMAs over the longer period EMAs, been trending in the right direction. Looking for a big red candle for this to enter. GE, I got in, I think, on this candle, this big red candle, just to show you exactly how my trade took place. So I see GE is the most heavily weighted stock in the industrial ETF of XLI. XLI is trending upward, right? GE has a big down candle red day. That's the day that I get in, right? I got in towards this big down red candle at a daily price movement range using the daily price movement range tool from Simpler Trading, right? So then it came down a little bit the next day and it popped up, and that's why we're currently positive, right? So that's an ideal entry. That's what an ideal entry looks like for me. And then my swing trade on GE, I think the expiration I have is October 18th. So I got, 2 or 3 weeks, almost 4 actually when I entered, to potentially have this thing go and make a new high, right? And that's what I liked about it, is that it seems to be making new highs and higher lows, right? So this is something that I got into in a sector that is trending higher too. So the tide is going in the right direction. And this is the most heavily weighted in that particular sector, which is GE. So that's why I got into this position on this day. I think that was Thursday when I alerted that out to everyone, right? That was the trade that I took, and why. Big red candle on a stock that is trending positively in a sector that is trending positively. Caterpillar, same thing. I haven't really been looking at this, but it's on my look at this huge trend upward. It's trending upward, higher lows, higher highs finally, right? It's starting to trend upwards. Shorter moving periods are over the longer periods. So Caterpillar's on my list for next week too. RTX, same thing, but this is why this is the last on my list, is because it's more flat. We still have this positive trend, but the trend isn't as strong as it is in Caterpillar and in GE. So if I had an option, I would trade GE. Well, the only reason I put GE first because I'm already in this trade. I would trade GE, then Caterpillar, then RTX would be the last on my list if they all triggered at the same time. I would prefer to trade Caterpillar, GE, or XLI itself over RTX, which is consolidating more, right? If you look at it, it's been more sideways, but if you look at the moving averages, they're still in an upward trend, right? So last, or not, no, I don't think this is my last one. Gold. I have one more sector after this. Gold. The one thing about gold is the same thing, the same issue I have on XLU. Gold is a safety play, and we're at the end of September and the end of quarter. So if you're looking at how well gold has been doing, my fear is that people are going to start taking profits. The people that bought down here are going to start taking profits soon in gold, because gold has been hitting highs and new highs and new highs. Same thing though, it's trending positively looking at the moving averages, but I will still take another gold swing, because I think I took this one right here, this red candle right here is where I got in, and I had $1,000 trade on gold and got out around right here. And so if gold gives me another pullback, I will take another gold trade until it stops trending, and who cares what I think? I'm just going to try and follow the chart and trade like a robot, right? Because because this was a really great trade for me, I think a week or two ago. I either got in on this candle here or this candle here, but either way, it was a really good trade, right? It was like $1,000 win for me. So gold is still a positive trade. I don't trade GC itself though, because that is the futures contract. I don't trade futures yet. I trade the ETF version, which is GLD. If you look at GLD, I did this last week. The chart will look almost exactly the same as GC. All right. Next, XLC. This is something that is coming up, but you'll see these are the things that are like, if we're looking at sectors, the ones that are coming later for me, I think, are the weaker hot sectors. So I will take them, but I might take them with smaller size or wait for a bigger pullback in XLC or Meta, because these are now more recently trending names that haven't been trending as well as the ones that I previously just mentioned. If you'll see, like, the EMAs are not as parabolic as those other ones, but I do like XLC. It's recently started the trend where we're making higher highs, high, higher high, higher high, low, lower low, right? I mean, low, higher low, higher low. So I do like what XLC is doing, but the only stock that I like within XLC right now is Meta. This is the one that only has like a consistent trend. The other two heavily weighted inside XLC are Google. Google's not doing that well. It's kind of sideways right now. And Netflix is pretty big in XLC as well, and some other things as well. But Meta is what looks like is powering XLC, and it looks very similar to the chart. And I always want the chart that looks very similar to what the sector is doing. If you look at the sector, Meta looks very similar to the sector, so it's going with the sector. And so that's the one that I'm going to be waiting for a pullback on if I can't get into XLC itself. Right. All right. And then what are things that are starting to trend that I'm going to be looking at for the end of this week or potentially next week? XME and FCX, which is Freeport McMoran, which is heavily weighted in there. So I will be looking to see if XME continue its run. XME is also tied to copper, which is the futures will be /HG. If you look at my list, I kind of follow that too. If I see copper doing well and XME doing well, then I'll be like taking a look at XME itself for a swing or Freeport McMoran. And then I'm also looking at tech, XLK and SMH, which is a semiconductor portion of the tech sector. Those have started to do really well since the interest rates have gone down, and since Micron did really well last week, we've seen kind of a boost in the tech sector, and that's been doing really well. So I will be looking at those to see if those start trending more strongly, and then those will come on my list. And then chances are, if these start specifically XLK and XMH or SMH start trending strongly, chances are the consumer staples, the XLPs, the XLUs, the gold of the world might start coming down. So I might stop trading those things and start trading this, right? And I just wanted to show you like the fluidity of my trading strategy is I don't really care. Like I'm just looking at what's strong now, what's strong over the last 30 days, the last week or so. And then that's where I'm going to be positioned. I'm not I'm not trying to forecast the market. I'm not trying to figure out, hey, in 3 months I think this is going to be hot. I don't care. I want to know what's strong now and what's pulling back. That's my trigger to enter, is on a pullback of something that's currently strong. And then that's going to change week by week, month by month. Something next month might be the strong thing, and what was strong last month might be the weak thing this month. So I might stop trading that and start trading this. It just depends, right? So it's fluid. So people that say always trade gold, always trade tech, it's like, no, trade what's strong now and short what's weak now. That's my strategy. That's it. It's very simple, simplified. We're looking at weekly news next week. We got the Fed Chair Powell speaking. These things are more important, especially for like swing trading or day trading. If you're day trading 30 minutes before Jerome Powell is speaking, you might want to get out of that trade before he speaks, or set your stop loss to break even while he's or to a certain level while he speaks, because you just never know what he might say that might trigger the market up or down. So these are just things to be very wary of. Or Sometimes if you're waiting for a pullback in a stock, if something is strong, what you'll see is you might get your chance for that pullback right after he speaks. If he tanks the market, then that might be your chance to enter if you're waiting for something to pull back. Like a lot of times after these releases of information, you'll see a pullback on something that you've been waiting for. So that's why it's important to know when they're happening. So if he's speaking at, and I don't know the time offhand, at 11 a.m. Or 8 a.m. East Coast or whatever, let's say, yeah, 11 a.m. East Coast, 8 a.m. West Coast, you might want to have, or you might want to watch the market at 8 a.m. to see if one of these names that we just talked about is going to be pulling back to a level that's going to be good for a swing trade after he speaks. Same things for job openings, because this is one of the main indicators of whether or not the Fed is going to be cutting a quarter point or a half a point again in the next meeting, is how weak is the job sector. And October 1st, we got 5 other lesser important Fed speakers, but they're still important. They could potentially move the market. 4 on October 2nd. And on October 3rd, we have some unemployment numbers and another Fed speaker. And October 4th, another Fed speaker, right? These Fed speakers are going to be more important for day trading and maybe some swing entries rather than like long-term stuff, right? Fed Chair Powell might move some long-term stuff himself, though. That's why he's the king, always more important. And then next week, the only big earnings report that I see is Nike. And they just changed CEOs in Nike. They had a terrible quarter last quarter. So we'll see how consumer staples are kind of doing, because Nike is a big consumer staple company. And in the athleisure footwear space, right? So this could also be a sign of how the economy is doing. It's like how Nike is doing. And this is what I'm saying. This might affect the sector. So what is Nike heavily weighted in? I'm pretty certain, I have to double check, that it's heavily weighted in XLP. So if Nike reports terrible earnings, that might affect the entire consumer staples sector, right? And so just to show you real quick, how would I determine if Nike is heavily weighted in XLP? I type in XLP holdings or top holdings, right? And of course the new AI on everything helps with this, but I just go to an ETF, go look at the holdings. Let's see, is Nike dropped? Man, maybe they moved it out. Where is Nike? Let me see. I feel like it used to be heavily weighted here. Maybe after it tanked last time, they took it out. And this is also something you got to do too, is you got to keep looking at these things, because sometimes, like if you look at, like, this is why I say ETFs are like the all-star teams of a particular sector. If they see something tanking, they'll take it out, or they'll take out the weight. They'll change the weighting. So you got to go look at these every now and then to figure out what's heavily weighted and not. So I'm saying NKE heavily weighted sector. Oh, maybe it's an XLY. Interesting. See? There you go. So Nike is more weighted in XLY instead of XLP. Yep, it's 2.72%. So Nike is actually, and this is why I do this research, if I'm putting on an XLY trade or swing, which is on my list, and looking for a pullback, you might get it if Nike reports terrible earnings, because it is more heavily weighted in XLY, which is consumer discretionary versus consumer staples. So Nike is going to affect XLY next week. So that's why it's going to be important for you to watch it, right? But this is how I go look. I know XLY is mostly Amazon and Tesla, Home Depot, McDonald's, and Lowe's. That's why they're on our list, right? But Nike is also decently weighted in the sector, which means it could move everything if its earnings are terrible on October 1st. Right? And that is it for today in terms of my slide presentation, folks. We're 7 minutes over. There's my daughter learning. Any questions? Anything anybody want to talk about? Go over before we end today, fellas. And all right, that's it. I know some of y'all are at soccer practice and whatnot. So, with that being said, Mokama Sunday service. If you want to be on the Zoom every week, leave a comment, leave me a message, and I will shoot you the Zoom link so that you can join yourself and ask any questions that you might have. But yeah, every Sunday at 8 a.m. we do this live on YouTube. Mokamas making it rain without the umbrellas. Until next time, y'all have a good one. Peace.